Well, the Dow and gold soaring on the heels of the Fed announcement of $600 billion in stimulus. Yet another attempt to spur the economy along. Fed President Thomas Hoenig describes this move as a bargain with the devil. Is he right? Has there been too much Fed intervention? Well, joining me now, Peter Schiff, President and Chief Global Strategist at Euro Pacific Capital, and Jamie Cox, Managing Partner at Harris Financial Group. Peter, it's great to see you. Did we need $600 billion yesterday?
Now, QE1 was a mistake. QE2 is going to be a bigger mistake. You know, instead of comparing it to the Queen Elizabeth, how about the Titanic? That's a better reference. It's going to sink the U.S. dollar. It's going to sink the economy. The result of quantitative easing is going to be higher consumer prices, higher interest rates, higher unemployment, and a much weaker economy.
All right. What do you make of this, Jamie?
You know what they say, the Fed may try to print money, but they can't print jobs. And it sort of seems to me that the Fed is trying to go down that road to try to print jobs by increasing the money supply. I don't think it's going to work. But in my opinion, you know, it's a good day on Wall Street. I think what we're seeing is the dollar being burned and stocks kind of having the opposite effect. But I don't believe that the QE2 was either necessary or warranted at this point. I tend to agree with Peter.
All right. Well, let me get reaction from Ben Bernanke himself, because he actually wrote, which is very rare, an op-ed in the Washington Post this morning. And I want to read you both this quote and kind of get your reaction on the other side. Here's what he said. Although low inflation is generally good, inflation that is too low can pose risks to the economy, especially when the economy is struggling. In the most extreme case, very low inflation can morph into deflation, falling prices and wages, which can contribute to long periods of economic stagnation. Peter, it sounds to me like he's warning us that we could be Japan.
Well, you know, Ben Bernanke has never gotten anything right in his career, and here's no exception here. I mean, he might have got a 1600 on his SATs, but as far as basic economics, he's an F student. You know, I've made a lot of money betting against Ben Bernanke. If you want to make money, just whatever he thinks is going to happen, you can rest assured the opposite will happen. Inflation is not too low. In fact, what we need is deflation. We'd actually need falling prices, which would actually help the economy, would help the unemployed if food prices went down, if gasoline prices went down. Instead, they're going to go through the roof. And you don't create jobs by creating inflation. You know, you can lower wages by creating inflation. You know, when you create inflation and debase the dollar, it's like reducing the minimum wage, which would create jobs. But the problem is the government is adding all these extra costs, mandates, health care, regulation that are driving up the cost of employing people faster than inflation is driving it down. So this policy cannot work. It will not fail. And all he's doing is he's trying to cover up the monetization of debt. This is all a smokescreen. They are not doing this to help the economy. They are doing this to facilitate the U.S. government going deeper into debt. The demand for treasuries around the world is evaporating, and the buyer of last resort is the Federal Reserve. They are monetizing this debt. It is going to cause runaway inflation, and the economic collapse that we're about to go through, maybe it'll start in 2011, this is going to be much worse than what the Fed thinks they prevented in 2008.
Peter, I don't think you breathed for the last 2 minutes, but Jamie, that's impressive. And I'm a broadcaster, but Jamie, it seems to me that Ben Bernanke was kind of taking a swipe at the inflationists out there. But do you think that he has to at this point? I mean, do we really see signs of inflation anywhere? Really?
Well, if you go to the grocery store, you see inflation. I mean, you know, the average person sees it. I'm not so certain you see it if you're looking at macroeconomic data. If you want to cite capacity utilization and things like that, I think you can make the case for inflation may be tepid. But on the consumer front, gas prices are higher. Oil prices, you know, go buy a gallon of milk and tell me that there's no inflation. It's kind of hard to make that comparison, but we always separate out the things that people actually buy from the inflation computation. So I'm not necessarily, I don't really understand it, but that's why the CPI data seems to be low, is because you subtract out everything that shows inflation. But I think for the average person out there, you know, I think the average consumer is trying to delever, and I think all the things that Peter says is true, but there's probably only one or two things that may actually be positive. If you can, you know, allow interest rates to stay low for a long time, you may be able to let people kind of delever themselves, get their balance sheets cleaned up. But that's really the only positive that I can see with all this monetization.
We actually need higher interest rates. That's part of the way to resolve our imbalances. We have a lack of savings in this country. We need more savings. That's how we get more capital investments, more production, more jobs. But we're not going to have any savings if we destroy it with 0% interest rates and money creation. And quantitative easing is inflation. That's just another way to describe it. Ben Bernanke creates inflation when he creates money. We're just trying to measure the effects of inflation when we look at these things like the CPI, but the CPI doesn't do a good job because the government calculates it and it's deliberately reverse engineered to hide how much inflation the Federal Reserve is actually creating. And they're doing it to benefit the government. The government is the world's biggest debtor. They fear deflation. They're trying to wipe out their debt with inflation, monetize it, inflate it away. And so they're trying to scare us into thinking that we need to fear deflation when their real agenda is to create inflation, and that is what they're doing. And unfortunately, that's the only thing they're going to succeed in, is creating inflation.
Okay, Mark DeCambria wants to jump in, gentlemen.
Hey, Peter, I've been a fan of yours for a long time. You've been a Cassandra of the markets, and I got to say, it seems to me you're right again. I mean, and the notion is that it seems like what Bernanke might end up doing with QE2 is devaluing the dollar, which ultimately is going to make, commodities that much higher and make it that much higher for consumers to actually pay for goods and services and make the situation worse. And as you pointed out earlier, maybe we didn't even need QE1 to begin with, because it seems, I was talking to my sources that at its bottom, corporate profits have actually started to turn around, and and we're seeing delevering of consumers, which is not a good sign.
But we're getting a leveraging up of the government, which is borrowing in the name of consumers. You have these Republicans now that are just elected. Everybody's talking about tax cuts. QE2 is going to be the biggest tax hike any American has ever paid, because it's going to wipe out the savings, the cash value annuities, life insurance. It's going to wipe out the wages of every American who works for dollars. This is going to cause a huge decline in their standard of living. This is taking money out of the pockets of American savers and American consumers just as surely as if the government had taxed it.
And that's what Hodak means when he says playing with the devil.
Yeah, Mark, I think you made Peter Schiff blush just a little bit. I saw a little bit of pink turn to his face.
I've seen too many Peter Schiff interviews where he says exactly what's going to happen, and people poo-poo his comments, and lo and behold, it comes out.
Peter and I have had some battles on the air. That was a long time ago. Peter Schiff, all is well. Thank you so much for being on the show again, Peter Schiff, and of course to Jamie Cox from Harris Financial Group.
Right now, more than ever, the public needs to hear this.
The conspiracy against your money.
This is why we're here, so we can address the issue before it's too late.
As you've probably noticed, we are living through an economic disaster unlike anything the world has ever seen. People are losing their homes at record rates. Household and government debt is exploding. Good people we love and care about are losing their jobs and their savings. The middle class is shrinking and is in great danger of disappearing altogether. My name is Andrew Cass. As you'll soon see, there is indeed a conspiracy. It's been pulled over the eyes of honest, hardworking citizens like you and me by the people in power. They've kept us in the dark far too long, and we've paid for it far too dearly. But now it's our turn, and it's not too late. We know what happened to your money. We know who took it. And if you're the type of person who's willing to take a stand for yourself, with courage, integrity, and a self-made resolve, we know exactly what you can do about it. You see, most will never have the opportunity to pull back the curtain and look behind it like you are about to. By the end of this DVD, you will know who is taking your money and what you can do about it starting today.